Let me start by talking about electronic annual reports. The reality is that the world in which we live is changing. When you qualified 51 years ago, that's Chief Adeboye, that was when I was born. Now, the accounting practices of those days, forget about 51, even when we qualified, I qualified about 28 years ago. I can tell you that unless I go back to update my skills, I can no longer prepare financial statements based on the standards that were taught in those days. And I'm sure you know also that from this year 2012, all banks are mandated to report their financials under the International Financial Reporting Standard, IFRS. Believe me, the standards are completely different from what you used to know. And the treatment of certain items are completely different. So I will appeal to our slightly older shareholders to try as much as possible and move with the trend. And you will be surprised that on the board of First Bank, we have age diversity, which is a very good blend. The young, the not so young, and the old. We do not, we have moved from paper board meetings to imbibe the First Bank culture and practices. That has therefore put demand, very positive demand, on our resources. Our reaction to this is to make sure that we do not deny anybody, either corporate or individual, who desires to bank with First Bank should not be denied the opportunity to do so. And so in the year 2012, we are increasing the number of our branches. From 650, we are adding 135 new branches across the Federation. The reason for this is twofold. One, to ease the pressure on the existing branches due to increase in customers. And the increase in customer base is real. Between December 2010 and March 2011, we increased the number of customers by over 800,000. And the total number of customers of First Bank moved from 5.1 million to about 6.3 million customers in about 15 months' time. So it is real. And the profile of those new customers is exactly the desired profile. We don't want an aging customer base. So we are now able to attract the young ones because we meet them on Facebook, we tweet with them, and so they come in. Now when they come in, what do you want them to feel? You want them to be satisfied, and so we are decongesting the banking hall by increasing the number of ATMs that we have. We've put in modern internet banking solutions, and today you can do all your banking transactions and you can test it on your mobile phones, including transfer from one bank account to another bank account. These are things that we believe will ease the pressure in the banking hall. The issue of charging customers who come into cash amounts less than 100,000 naira is no longer valid. By the cashless policy of central bank, checks to third parties can no longer be encashed over the counter. So the issue of charging customers for encashing third-party checks is no longer relevant because it's now, in fact, no longer possible to do so. Let me take time to talk about Seawolf. The starting point of this conversation is the fact that Seawolf loan was never non-performing. And it was not sold to AMCON on the basis of a non-performing loan. We took advantage of the fact that the major driver of the Nigerian economy is the energy and oil sector. And up to the time in which we've granted the loan to Seawolf, there was no single Nigerian company that was involved or engaged in production, in leasing of rigs. There was no Nigerian business in the oil rig business. And so we took advantage of that as an opportunity to finance a group of young Nigerians to acquire a company and provide rig services to the international oil companies. And so we funded the acquisition of those rigs by way of loans. And as I speak with you today, those 3 rigs are working and the revenue is coming in on a daily basis. They are leased to, one is leased to Corn Oil and is drilling oil. The other one is leased to Total and is doing very, very well. In fact, we were told that it's the best rig that they have. And the third one is on lease to Adax Petroleum. So the rigs are performing, the loans were being serviced. However, because of the size of the loan, in spite of the fact that it was performing, Central Bank felt that they needed to complete their cleaning up exercise and did not want to leave any chance for the loan to get back in the unlikely event that it got back. So they therefore compelled us to sell the facility, even though it was performing, to AMCON, so that it can reduce the risk going forward for the facility to turn back. And I think it's important that we understand the context in which the loan was sold. Yes, we had to take a haircut of 10% on the facility, but by and large, at the end of it all, I think it's a good thing that we've been able to sell this and we can fund other businesses with the proceeds of the sales that we got from the sale of the civil facility. So please be rest assured that this is a very responsible board and management. I have noted the issue of the holdco. We've said a lot about the holding company. The whole essence of it is to make sure that the synergies and values that exist in the non-bank businesses of the group are retained for the value and the benefit of the shareholders. It would have been easier for us to sell those businesses, but the reality is that those businesses are doing very well, and the return on capital employed for those businesses is very good, and we think that you should share as shareholders in the benefits of that. The registrar business particularly is a business we would not have loved to sell because it's doing well, but the reality is that the central bank has pronounced that it is illegal for any banking group to retain its registrarship business. So we'll be transparent and the sale process will go on. I can confirm also that the profit from the sale will be realized in the current financial year and will form part of the benefits that you will all get at the end of the financial year 2012. Lastly, let me comment on the issue of ₦1.45 earnings per share versus dividend payout of 80 kobo. The reality is that size matters in banking, and your ability to service your customers is highly dependent on your shareholders' funds. We have what we call the single obligor limit, which means the total amount of loans that a bank can grant to a customer, and it is a percentage of the shareholders' funds that you have. Size matters, and so it's important that we have a dividend policy that balances cash payout to investors and retention of earnings for the future benefit of the organization. It's difficult, but it is important to strike a balance between future growth and immediate benefits to shareholders. What we should be concerned about is that so long as the bank continues to do well, and we will continue to do well by the grace of God, the earnings will continue to increase, and so the dividend payout will continue to also increase. As we move on to tomorrow's annual general meeting, I was here last year and I did promise that we would have an improvement on our performances relative to 2010, and I believe that we have done that. In the year 2011, we were able to grow our balance sheets by ₦1 trillion in 1 year. No other bank has been able to achieve this. We moved from total balance sheet, total assets and contingents of ₦3.3 trillion to ₦4.3 trillion. And I was reminded by the governor of Central Bank that that is in fact the total size of the budget of the Federal Republic of Nigeria. We were also able to increase our return on equity from 9.7% to 13% in 2011. And if you look at the performance for Q1 2012, which was a profit before tax of 28 billion naira in 1 quarter, based on IFRS, that return on equity moved to 20 to 25%, and that's what we are guiding going forward. So I'd like to thank the board for giving us the opportunity to express ourselves as management, because they have allowed us to take very bold initiatives and moves to reposition the bank. My assurance to you is that what we did in 2011 was laying the foundation for the future growth and sustainability of the performances of First Bank. As we have seen in the Q1 results, we outnumbered and outperformed competitors. We have been number one across about 4 parameters, but we have never in the past, to some extent, been able to be the most profitable bank, both in terms of absolute numbers and ratios. But what we did in Q1 2012 was to make sure that without compromising on good corporate governance and integrity of the institution, we've been able to consistently improve on our performance to the extent that, based on that Q1 result, we were the most profitable bank in Nigeria as at Q1. That did not happen by accident. We set out at the beginning of the year to consolidate our leadership in the industry. That is, to continue to dominate and be the biggest bank in Nigeria. And we extended the gap that existed between First Bank and the next bank from what it was in 2010 in 2011. The only area in which we were lagging was the area of profitability, and we therefore decided that we will not just consolidate that leadership, but we will extend the leadership to cover those areas of efficiency and profitability, and that was what we did. So we'll continue to do that, and we assure you that all things being equal, by the grace of God and by your grace and the support of the board, we will continue to impress you and continue to deliver superior returns going forward. And as we do that, let me link it to the issue of share pricing. We believe that the integrity of the institution is very important. We would allow market forces to determine the share price of First Bank, but what we would therefore do is to make sure that we continuously deliver superior returns on a consistent basis. That on its own will automatically make sure that the price of the bank is adjusted to where it should be without any manual intervention. Thank you very much, and God bless you.